Good afternoon, everyone. Today is Monday, the 21st of November, 2011, and the market's closed here. We did see some further downside in the S&P 500, down dollar, I'm sorry, 1.9%, and it did undercut that 50-day moving average in the prior support that it was trying to hold on last Thursday and Friday. So when we take a look at the 65-minute time frame, we had been observing that we're below declining 5-day moving average. We had seen some support levels hold as resistance, and we just dropped below this bigger, more important level at about that 121 and a half. Now, if we take a look at the volume weighted average price since the October low, we can see that that's where we were hanging on. That's what we were talking about last Friday, is we were hanging right around that volume weighted average price. And now what that means is that the average participant since the October low who's gotten long is now in a losing position. And we had seen, evidence that the market was getting weaker with the lower highs and, of course, that declining 5-day moving average that we've been talking about. Now, today, where we are in terms of as far as taking a look at the Fibonacci levels from that October low, we know that we had been hanging right around or just above that 38% retracement. Well, today we made it nearly down to the 50% retracement level, and this market is saying that on the daily time frame we're down below the 50-day moving average. We came down and tested what's been an important level in October as well, but with us below the volume weighted average price for the since the October low, and we can even go back and take a look at the volume weighted average price since the beginning of the year. Right now we can look and see that that's where we're having trouble, up near that 126 and a half level. So this market really remains very tricky. We've got lower highs and lower lows. Today we had a little bit of an attempted recovery during the day, and actually that was a decent little trade in there off of this bounce from the volume weighted average price. But again, it's just really tough to trust anything. Excuse me, especially when we're with this pattern of lower highs and lower lows on the intermediate term and below a declining 5-day moving average. So we're in a typically bullish time of year, that is right before Thanksgiving, but now we have this prior support level that is likely to offer resistance on any bounce. So up near about 121 and a half to 122 and a half, this area should be would likely be considerable resistance, especially the 121 and a half, if we're to get any type of bounce up towards there. So continue to look at this thing as guilty till proven innocent, and very difficult to trust. The Nasdaq, obviously, we lost that $56 level that we were talking about last Thursday and Friday. We closed below it. That was also where we had that 50-day moving average in this prior support. Today, obviously, we gapped lower and continued down in this market. When we take a look at, we had been looking at also in here the volume weighted average price since the October low, and this has been a little bit more difficult. That is to hold. It was tested more repeatedly, and then that 56 level hold, which broke as the support level that broke, did hold as resistance. And today, obviously, we continued down from there. When we frame it in terms of, as we have been, Fibonacci off of the October lows, we came pretty close to a 2/3 retracement in here today. And there's no magic that says you should buy there, just like you shouldn't buy at a 50-day moving average. Like we saw last Thursday, this market came down to the 50-day moving average. I'm sure some people were sticking their bids right in at that $56.20 level where that 50-day moving average was. The problem is when we see a widely watched moving average like that, all it does is give us a reference point to compare price to, and it gives us a reason to look at the closer at the shorter term average. If you took a look at the shorter term time frame, rather not average, the shorter term time frame on Thursday when we were at 56.20, there would have been no indication to buy in there, and in fact quite the opposite. It was still getting hit and really hadn't even begun to try to stabilize in there. So again, these moving averages, I think, get misused quite a bit by people who don't really understand what the psychology of the moving average is, and that's really what's more important. But this Nasdaq, now if we get a move up to 56, of course that would make a good bounce, but that's where we would likely find the larger resistance. There's nothing here suggesting that this market is ready for a bounce. I think you need a minimum of time to heal before we can begin to think about a bounce. The 50-day moving average did hold in the Russell 2000. I don't view that as a big deal. We look at the 65-minute time frame, and we can see a little bit of relative strength in this Russell 2000 as well, because it's hanging right around the 38.2% retracement. However, when you look at the pattern, we do have broken support at that 71.5 level, which is likely to become resistance, and I wouldn't be surprised to see a continuation of this pattern of lower highs and lower lows down at least towards that 50% retracement at 68.50. So don't let your confidence hold up just because we're at or don't look encouragingly to this market just because we're holding at a 50-day moving average. That's very temporary, I think, and there's nothing on the shorter term time frame that says the buyers are in here taking control. The semiconductors obviously had lost that 30.5 level. That's been an important level, and it was further emphasized as a important area, widely watched area, as it was the location of the 50-day moving average on Friday. The market closed on that. People thought we were at support. This was a potential level of support, but with a pattern of lower highs and lower lows. So the gap down really hurt this market today, and I think now 30.5 to $30.65 or so is where you would expect for some resistance to be found in the semiconductors. The financials continue to be a real laggard here. They're coming down to an area where maybe they're going to get a little bit of support because we had seen some support in there early October, and we're also at the 61.8% retracement level. But again, these are reference points. They're just something to compare price to. I think it's foolish to buy strictly because you're at a moving average, or strictly because you're at a Fibonacci level. It doesn't mean they're useless. It means that this is an area where, well, we've seen prior support. It is a 61.8% retracement. So the question is, what makes most sense? Does it make sense to sell short after this obvious break of support at the 1280 level, and here we are at 1220? Does it make sense to sell short now, or does it make more sense maybe to stand aside as we're at potential support, and wait for a better setup, or are you gonna look to go long? And I don't think that any of those really make sense, except for maybe you kind of begin to observe a little bit more carefully in this area for potential support. But again, there's nothing here indicating that. We just have these this prior support and a 61.8% retracement. That is not enough to make a good solid purchase on. Sometimes it works, usually it doesn't. So just be careful here, even with this seasonal bullish period that we're in prior to Thanksgiving. The charts aren't showing us bullish action.